Hi, Mehdi and welcome to Your Finance TV's Crypto Revolution, covering all things crypto and digital assets. We are here with Adam Blumberg, co-founder at Interaxis. Adam, how are you?
I'm doing great, Mehdi. Hope you're having a good day. It's always, as we say, always a lot of news in crypto.
There's always news in crypto. It's been a bumpy ride the last since we last spoke. I felt like it was a rocket ship last week, and there's now a little bit of turbulence around, and let's dive into what the turbulence is about. But before we do, Adam, don't forget, like and subscribe. We're through 5,500 subscribers. So thank you very much for your support. And always feel free, drop us a line if there's anything you want us to talk about. If you're bored of Bitcoin, well, you probably want to change channels. But if there's something else you want to talk about in the crypto world, then feel free to let us know. So, Adam, obviously, big topics all around the ETF still. There's the chatter. Is it going to get approved? The SEC came out and said they were going to push it for a decision. So I guess that puts us mid to late January at this point. Bitcoin, no, not Bitcoin, BlackRock has already started receiving some funds, seeding funds for their spot Bitcoin ETF. The SEC is obviously delayed. What are your thoughts? Is there anything else out there that's driving price other than it will happen, it won't happen?
I think mostly what's driving price right now is this kind of micro narrative around will the ETF happen or not, and I think we're pretty sure that it will. I actually saw, this morning just before you and I talked, where BlackRock and the SEC are meeting today to go over their spot BTC ETF application. And so it looks like everything's just kind of progressing forward and progressing forward. You mentioned BlackRock got their $100,000 seed. I don't think that's that big a deal. It's something that obviously makes news for the crypto people, but for anyone in ETFs, they go, okay, that happens all the time. It doesn't really matter. It's basically someone had to seed it, and I don't think it could be BlackRock themselves. They had to get someone from the outside to do it, and that's what happened. If they'd have called me, I'd have done it. Right, like I'd have found a way to scrape together $100,000 and be the seed funding for the BlackRock ETF. So I don't think that's as big a deal, but I think what we're seeing is all these companies, Grayscale, BlackRock, Fidelity. I think Valkyrie had meetings with the SEC. So I think you and I have said this over and over and over again. The SEC is not going to continue to spend all this time and have all these meetings and make all these companies amend their applications and then not approve. Right. They're basically saying we need everything to be perfect so that when we approve it, you can't rug pull Bitcoin on day one. Like no one can all of a sudden pull the rug out and all these investors get hosed. So the SEC, I think, is trying to wrap everything up nicely such that when they approve, which will likely be, early January, because that's when the ARC deadline is, and they're not going to approve one and not the others, but they're going to likely be early January, that everyone is on the same page. Everyone kind of has the same application. They all kind of look the same. Security is the same. Custody is similar. And so the SEC can feel relatively comfortable approving and moving on.
So while all of this is going on, and we view this as all positive interaction between the SEC and the applicants. It's all addressing any concerns that they have. The applicants are giving them the information they need. So everything's kind of rolling along, slowly but surely. Now, at the same time, we have our friend, U.S. Senator Elizabeth Warren, who's throwing, down her 2 cents, and she wants to crack down on Bitcoin and crypto as a whole. And she's introducing a bill, I believe, to try and come in the way of all of this. So what are your thoughts on this? Is this going to have any implications? Is there ramifications that come from this?
Well, this bill, one, it does have a relatively decent chance at getting through the Senate because of the people that Senator Warren has gotten on her side and kind of backed it. Now, you'll also, some of the things about it. One, this bill, and I don't even remember the name of it, but it could essentially be the bill that kills crypto in the US. Right. That's the negative. And when we talk about some downturns in the Bitcoin and the crypto market this week, this might have been part of the reason for it, because the onerous restrictions it would put on, it would basically make all Bitcoin miners, it would make anyone operating a wallet, it would make all sorts of entities that aren't even entities responsible for surveilling and reporting information to the government, which is just, one, not technically possible, and Two, an incredible invasion of our privacy, which is totally against the ethos of crypto. And basically, it would make it so difficult to use crypto in the US that we would just not use it. Basically, all the miners would leave. Any companies that even develop anything in the US in crypto would leave, because there would be no reason to try to do business, because it would be so hard. It would basically turn everybody into some sort of surveillance arm of the government. Because if I send you, the theory behind it is, if I send you USDC, that I would need to report it and you would need to report it. The government would have to know that that transaction happened, in the name of anti-money laundering. Right. It's kind of being added onto the Bank Secrecy Act. It's the idea that we want to know where every dollar is going, because we want to make sure that that's not criminal money or terrorist money or something. And so Elizabeth Warren does have some senators backing. What I have read also today, Mehdi, is, of course, something like this has to get through the House as well. And in the House, they can't get support for it because Patrick McHenry, who is still head of the Financial Services Committee in the House until he resigns at the end of next year, but who's still head, has basically told all Republicans, you will not support this. You will not be behind this. And since Republicans have a majority in the House, they're not getting enough support. I don't think very many Democrats are supporting it. I think everyone realizes how much of an invasion of privacy it is. And two, they don't want to kill the innovation. They absolutely don't want to do that. And so they're not necessarily going to get behind it. They're certainly not going to be the ones that killed a multi-billion, possibly trillion-dollar industry.
And if there was more concern about this being passed, I would have thought that Bitcoin would have really vomited potentially on the back of this if it was, if there was a running start at this thing. Because,
right.
But also, is it right? Let me play devil's advocate here, Adam. So let's say it does pass. Ultimately, I agree, for a traditional DeFi person, you're going to sit there and say, well, this is an invasion of my privacy. But it's no different right now to what's happening in the financial industry. Everything is logged. If I send you a Zelle or Venmo or something, that transaction notes Adam Blumberg, Mehdi Sunderji, all of this is traced back to our bank accounts. Right, so all it's doing is effectively bringing those controls into the crypto world, which, yes, I agree, is not the sense around crypto and how it should be. But is that really something we don't know? Is that something we haven't lived with for our entire lives?
I think it's going to be the actual requirement, that the number of protocols, corporations, people, entities that have to report, and the restrictions it's going to put on them, the technological restrictions and the time it's going to put on them. Because now it's right now, as you mentioned, right? If I send you money via Zelle, it's all done through my bank and your bank, which are already part of the Bank Secrecy Act, right? My bank and your bank both have the ability to do that, because my money is stored in my bank's database, and your money is stored in your bank's database, and they can very easily alert the government to whatever is going on. When we go to decentralized protocols, when we look at something like Bitcoin, what this bill would be saying is every Bitcoin miner now has to operate like a bank and be able to report to the government. And from a technological perspective, that's not necessarily possible. Every single wallet company, every single Ethereum validator would have to operate like that. And from a technical perspective, it's not really possible. And so they're just not going to be able to do it.
But what that would also do is drive all of that business and innovation into the banking system, the existing banking system, because they're the only ones who probably would have the rails to be able to manage all of this.
Right. Well, what it would essentially do is for most people say it's not worth it. Like, yeah. I'm not going through all this to just go back to be part of the banking system.
But you can sit in Canada and do what you want.
Exactly. So I think that's the issue here. But as you said, Mehdi, it didn't have a monster impact on the price of Bitcoin. Now, everything I've read again says this bill has more legs than most of the other bills that are aimed at killing crypto. And it's because she's been so vocal. It's because she obviously used this, erroneous report by the Wall Street Journal that says that Hamas was, raising money through crypto as kind of her pulpit to go to other senators and try to get them behind her. and these are other members of the Senate Banking Committee. There are other Democrats, members of the Senate Banking Committee. And so it has a little bit more legs than that. However, as we've been talking about with the ETFs, the likes of BlackRock, Fidelity, Franklin Templeton, and others, it would kill their business, right? And they definitely are not in the business of having the likes of Elizabeth Warren knock their funds down. So in an election year, I think a lot of these senators and a lot of these members of the House are going to go, look, we are not messing with BlackRock and Fidelity this year in a highly contested political year. We're not going to do it. It's not worth it for us.
Well, one public figure who did come out and throw some positivity towards Senator Warren was our old friend Jamie Dimon from JP Morgan. So he's been a very vocal anti-Bitcoin voice over the last several years, but he's kind of do as I say, but don't do as I do. Because on the flip side, he's sitting there, and I think they've just tripled the number of employees they have at JP Morgan focused on crypto. And he's not doing that for his health. He's doing it to make a dollar, and he chases that almighty dollar quite aggressively. And good for him, not knocking it. But then don't sit there and say, you should ban crypto. Like he literally, didn't he say?
Absolutely said the government should ban crypto. Those were his words. The government should kill it in the U.S. And I don't know how much of that is him playing to his friend Elizabeth Warren, who, by the way, helped bail him out in 2008 and bail out other banks and basically promised the banking sector, and especially the biggest banks, that they're going to have virtually a monopoly on this. And she's keeping up with that, right? That's part of this bill that she's trying to get passed. Is she wants the banks to be in power. They're the ones who keep giving her money. And I don't mean to be conspiracy theorist about this, but for a senator, who makes what, $287,000 a year to be worth $285 million, she didn't get there by being open to innovation. She got there because she helped some people along the way, and they're helping her along the way. And so, she's been very much for, helping out these big banks, being part of the Senate Banking Committee and the most vocal member. She has helped President Biden, select the people that are going to help her on that path. She clearly wants a central bank digital currency, and Jamie Dimon would prefer a central bank digital currency, because that still leaves the banks in charge of moving money around, right? That still means the federal government gets to decide who gets to distribute that currency. With Bitcoin, he doesn't get to decide that. It's distributed already, and he doesn't like that. But then on the other side, as you said, they've tripled the number of people they have in the crypto division. They're the ones who have JP Morgan coin that they're using. So they're utilizing the technology. So I think it's either Jamie Dimon kind of being smart and on one side going, yeah, I'm going to say whatever I need to say to make my benefactor happy, especially when it's under oath in front of Congress. But on the other end, I'm certainly not letting this thing get away. Like we're not going to not make money on crypto and blockchain. We're not going to dig our heels in so badly that everyone else passes us up. We're going to still be the top dog in terms of banks in the US.
That's it. Well, stay on it, Jamie. Say one thing to another. But on the flip side, some positivity in the world of Congress and the bills that are being passed. There was a pro-blockchain bill that actually finally got through the House, which feels at least one step forwards. And I believe it was unanimously voted, right?
Right. It was unanimously voted by, I think, Energy and Finance. And so it doesn't do a whole lot. It basically says we have to try to promote the innovation. We have to talk about how blockchain and crypto innovation is good for the US and not how it's so negative. That was all the bill. I think it was like 11 pages or something. In the world of bills, 8 pages of it is preamble and here's who all helped write this and why. And 2 pages of it is basically like, okay, we need to be a cheerleader for this in the US. And it was passed unanimously. And of course, in the energy business, they love crypto. They love Bitcoin, right? It's increasing demand for energy. Why would they not love it?
Well, that's 100%. I'm on board with it. And you know what? You're right. It is kind of like the postage stamp equivalent of a bill. But you know what? I'll take any passing and any absorption of technology, especially on the blockchain side, as a positive. It's a win.
Yeah, and anytime the government steps up in a positive light and says something good about it, especially unanimously, it's something that we're going to talk about. We're not going to knock it down because it was 11 pages. It was really good 11 pages, I guess. I mean, the Bitcoin white paper was only 8, and that's what drove this whole thing. So
that's a very good point. It's I can't believe I'm going to say, so, as they always say, size doesn't matter. Moving on from there,
that's gonna be the title of this episode.
I think it will be, but
it's going to draw the most views you've ever had.
Size doesn't matter. Here we go. So innovation continuing, and distribution and access and such. So Circle and Nubank. Circle we've discussed over the last several months on and off. They seem to be poking their fingers in lots of different pies. But Circle and Nubank have partnered to increase the digital dollar access in our neighbor Brazil. So this is quite a broad expansion. I'm kind of excited about this. Talk us through this.
Yeah, so Nubank is one of the largest kind of neo banks or fintech companies in Latin America, and they've people, we've talked about this before. They're in the developing worlds. They tend to be going straight to mobile devices, right? Mobile banking, mobile everything, to where they don't go into bank branches or use checks or anything like we do. Everything's very mobile, and Nubank is one of those. And so now Circle and their product USDC, US dollar coin, is available on Nubank. So I can, theoretically, people utilizing Nubank in Brazil and Latin America can send USDC to each other now, which is really a big deal. We've seen and we've talked about Latin America being such a huge market for crypto and for blockchain technology, and not just people investing and speculating on Bitcoin, but because there's so much corruption in terms of the government banks in Latin America, because we've seen incredible inflation rates, and so now to have USDC offered through an actual bank in Latin America, such that the people who have those apps, the people who have those accounts, can transact in USDC on chain, it's a really big deal. And it's especially good for Brazil. But then if you start looking at other countries that we've talked about, like Argentina, and now the people can have access to USDC instead of their currency that devalues 100% a year, it's a huge undertaking and a huge step forward for those people. It's not just for crypto; it's for people that now have access to something that, for all we joke about the value of the dollar, is much more valuable than their currencies.
Well, it's interesting you mentioned Argentina. There was a headline, I guess, yesterday or today, that they just devalued their currency again by 50+%. So this is a constant battle that these pseudo emerging markets are having to deal with, and this is a solution. So, stay on top of it, Nubank and Circle.
Yeah, go. I'm all for it. And interesting to note also, remember, Brazil was one of those that was trying to get out of the US dollar, right? Get out of using the US dollar. And here we've kind of taken it back to them and go, well, you don't have to use a dollar, but you can use something that looks and feels an awful lot like it.
No, we'll see if everyone else jumps on board with that, but it's a good start with Brazil.
Yeah.
So the DTCC, Depository Trust and Clearing Corporation. Yep. All right, I've got that right. So they closed a deal on Monday to acquire a company called Securency. Securency. Wow.
Securency.
I'm struggling here with everything. This was a deal that was announced a few months ago. As part of their bid, I think they're trying to accelerate the expected institutional use of on-chain assets, right? So within the tokenization push and such. So, talk us through this, talk us through the use cases, who, what, why should we care?
Well, this is a really big deal, and I've said that a lot today. This is a really big deal because the DTCC is in charge of kind of clearing all the public stocks in the US, right? When you and I trade some sort of stock, obviously we do it through Fidelity or Schwab or whomever, and the DTCC is in charge of like, if you're with Fidelity and I'm with Schwab and there's a swap going on, they help move those assets. They help move that stock keep track of who has it, and whether it's at Fidelity or Schwab and you get some beneficial ownership of it, the DTCC keeps track of that. They're the ones who manage that database. And for them to purchase Securency, which by the way is a company that I talked to, I think 4 or 5 years ago when I got into this guy, founded by a guy who's ex-military intelligence. So he really knows how to keep things safe and, no pun intended, secure. But that, purchasing them basically says, look, we're going to start utilizing this technology. It's maybe better than the database that we have now. We're going to start using blockchain technology, and Securency is big on the tokenization aspect. So with DTCC, it might go from just tokenizing publicly traded companies, which I've talked about before. I think they're all going to be on chain because it's a better database to use. And maybe the DTCC is going to start doing this with private companies as well, or private investments, private offerings like debt instruments, or like, private companies, private real estate, whatever it might be. They might be the clearing corporation for that as well. And bringing on Securency is basically bringing on this company that is the expert, one of the experts in this, rather than DTCC having to build it all on their own. Or, in which case they'd probably go to different, blockchain developers, probably go to different chain protocols, and all of them would make their pitch as to why you should use, Ethereum or Polygon or Solana or whatever it might be. They just went to Securency and said, we're going to buy you. You guys do this. You're the experts. You do it. And it's huge not because it's going to turn publicly traded companies into cryptocurrencies. Right now, you and I both know that some of them are actually more volatile than crypto, and have been for a while, and some of them are just plain meme stocks. But what it means is, as we move to the blockchain technology, we're going to see more transparency. We're going to see more likely instant settlement. We're going to see more of you and I being able to custody the assets in our own wallets and not having to go through centralized custodians like Fidelity and Schwab. So it's moving us towards all of that when it's not us having to push this on anybody else. It's not me going, look, I would really like to own this in my wallet. I really wish there were a blockchain version or a tokenized version of a publicly traded company. This is the top company going, we're going to go ahead and do this. You guys better figure out how the wallets work.
I think this is great. It's one of those things where it's almost taking it back to the old version of the stock market certificates, right? But it's digitization of that, and you feel like you have an actual thing that you can kind of look at, or in your wallet, in your digital wallet, but you've got something there, not just a couple of numbers and P&L balance. But so this is I think it's bringing everything into a new age. It's nice to see a agency like this actually adopting the technology. So Good on you, DTCC. And hopefully this keeps putting pressure on the likes of the SEC that this is happening in the rest of the industry. Why don't you look at what you're doing on your side of the industry and actually tell Elizabeth Warren to maybe worry about something else? And I phrase that a lot better than I was thinking it.
Yes. So it's much better than size matters.
Yes. Now, size matters with Coinbase. There's my transition. But no, Coinbase has been coming up in news every week. It feels like that they're kind of announcing something new and some sort of project or something. But they've just announced Coinbase Asset Management announced Project Diamond. So what's Project Diamond? And I believe this is again an institutionally focused project. But let's run through this.
Right. So Project Diamond is an institutionally focused platform that will allow, we're just talking about the DTCC and Securency. This will allow companies to on-chain start issuing tokens that represent some sort of investment. So again, it could be credit and debt. It could be equity. It could be, whatever they type of company or whatever type of investment they want to issue. But it's basically a platform that is going to be regulated. There's going to be some KYC AML in there, such that if you're going to trade these, you're going to have to prove who you are. You're going to have to give some sort of KYC information. but they're doing it on top of Base, which is their layer 2 that's on top of the Ethereum blockchain. So Coinbase basically handing over to institutions, look, you can now come here, create a token that represents your investment, and it can get traded on our layer 2, which means it could be very fast. It can be very inexpensive. So you don't have to worry about all those Ethereum issues of being slow or being expensive for people to trade. We've taken all of that away, and we're going to allow you to create tokenized versions, and we're going to give you the platform to do so, the platform to trade it. It's going to happen on Ethereum. Again, all those things we just talked about with DTCC and Securency, transparency, instant settlement, up to the second understanding of what's going on, and the ability for so many more people in the world to actually have access to some of these investments once they've gone through that KYC AML process. So on one hand, you have the Elizabeth Warrens who say, we want to know every single thing you're doing with your money all the time and make sure that it's okay. On the other hand, like all the way to the other end, you have the DeFi degens that say, I don't want you to know who I am. I don't want you to know what I'm doing. Nothing, everything can be anonymous. And Coinbase going, we know both of those don't work. We're going to meet you somewhere in the middle and say, we're going to do some KYC AML, but we're also going to give you the aspects of blockchain technology you really like, which is, again, the instant settlement, the transparency. It's easy to track. I can hold it in my own wallet, all of those things. And this is going to be piloted in Abu Dhabi first. It's obviously, for obvious reasons, Coinbase is not going to pilot this in the US. They have enough problems here. They're going to go to Abu Dhabi, which, of course, the UAE has been very receptive of crypto and blockchain technologies. And so they're going to go there first and start, having some of these investment managers issue these tokens on top of Base, which is their layer 2.
This is great. I was going to actually wrap with the fact that it wasn't obviously going to be done in the US. They were kicking off in Abu Dhabi. So thank you for clarifying that.
I apologize. It was way too obvious.
I know. It was like, I'm sitting there thinking, wow, our viewers are probably thinking, wow, this is amazing. Good for Coinbase. How can I get involved? But you can't. So unless you're outside the US, so non-US institutions, feel free to go check out what's happening in Abu Dhabi and reach out to your Coinbase representative. But Adam, that's the show, and I really appreciate you sharing your thoughts from Interaxis.
All right, great to be here again, Mehdi. Thanks so much for having me.
Absolutely. And everyone, don't forget, check out Adam's courses at interaxis.io. They are focused on digital assets and crypto education. And if you're an RIA, this makes absolute sense for you right now. I would get on top of it because everyone is asking about crypto. How do we invest in it? It's not just go and buy an ETF because it's not available yet. So why don't you go educate yourself, find out more so you can better serve your clients. Thank you for watching. And until next time, good luck investing.